GameStop's up 1,000%. Is this a short squeeze? Yes, hedge funds were betting that the stock would go down. So they borrowed shares of GameStop, hoped the price would go down in order to then buy them back up again, return the borrowed shares, and profit the difference? Exactly, except now lots of people on the internet decide they want to rally together and buy up GameStop, spiking the price. When the price goes up, hedge funds who are shorting it are forced to buy the stock, are they not? Yeah, they have to buy more in order to not take crazy losses, which forces the price up even further. They keep shorting it, hoping the mob gives up, but right now they're losing.
Short occurs, you borrow the share at $10, but the brokerage just gives you the $10 for that share. In exchange, you have to actually give them a share of it back eventually because you borrowed it from them. But they're giving you $10 of liquidity, if that makes sense. So whatever the stock is at, if it's at $10 and you say you want to short it at $10, they'll give you $10. And let's say the stock drops. Let's say it then drops to $5. So then on the open market, you can just buy the stock for $5 and then you can return that borrowed share and pocket the difference, which was $5. A short squeeze occurs because, so basically what happened was there were more shares of GameStop shorted than there were actually shares available. And so when you have more short interest than actual shares available, it actually sets it up for an interesting situation if the stock starts to go up. Because all the short sellers they're just betting that the stock will go bankrupt. So somebody noticed this back in 2019 or 2020, early 2020 on Reddit. Basically, the guy realized that this was setting up for a short squeeze opportunity. And so all of a sudden, if the stock price goes up and up and up, and so what short sellers have to do when this happens is they have to buy back shares at the open market price so that they don't lose infinite amount of money. So essentially you have that going on, but maybe times 100,000 shares or 1,000,000 shares, for example. And so all of a sudden, if the stock price goes up and you have a mass movement like this, then the short sellers are kind of forced to buy the stock. And if they're forced to buy the stock, then the stock price is going to keep snowballing upwards and upwards and upwards because the stock price is just a reflection of supply and demand.
Dude, I think Tesla's going to go up this week. Should I buy a call option? Do you even know how they work, dude? Not really. The option contract gives you the right to buy 100 Tesla shares at a certain price. So if they go above that price, you make a ton of money. So if I buy a 2,200 Tesla call and the price goes up to 2,500, I make $300 in profit per share times 100? Yeah, but they're super risky and the options expire. So a call option gives me the right to buy it, but if it doesn't go up in that time frame, I actually lose the price I paid for the contract. Got it. The news is saying that the market is up today, but I'm actually down on my portfolio. So what are they talking about? They're usually only referring to the 30 companies in the Dow Jones index. As long as the majority of those stocks are up, they'll say the market is up. So even though the market is up, my individual holdings like Tesla could be down. That's right. Why they choose the Dow Jones to be referred to as the market when they could have chosen something like the S&P 500 or the NASDAQ? So in general, the Dow Jones is a good indicator of the economic health of our nation. That's why people like to say it.
Yo man, I found a stock that's only 5 cents a share, so if it goes to $1, we both can make a lot of money. Dude, are you talking about a penny stock? Well, yeah, doesn't that just mean it's a cheaper stock? A penny stock doesn't file any papers with the SEC, and they don't have to make their financial situations transparent, so they're super risky and frankly kind of shady. Oh damn, I had no idea, so I shouldn't invest? Not unless you want to take a huge gamble. I think you're better off sticking with a large cap stock that trades on the New York Stock Exchange or the NASDAQ.